Many people worry about having to pay more tax as their income increases. In this video, we'll explain what becoming a higher rate taxpayer really means. Put simply, a higher rate taxpayer is someone who pays income tax at a rate of 40%, that's 40p in the pound, on some of their income. This is in contrast to a basic rate taxpayer whose highest rate of income tax is usually 20%. It's important to understand that becoming a higher rate taxpayer doesn't mean paying 40% tax on all of your income. Thanks to a system of tax bands, you only pay the 40% tax rate on income above the higher rate threshold. To explain how tax bands work, we need to start with the personal allowance. This lets you receive an amount of income tax-free. For most people, the personal allowance is currently £12,570. Only the very highest earners, those with an income of over £100,000, get less than this. We cover how the personal allowance is reduced for high earners in our Tax Issues for Higher Earners video. You'll find a link in the description below. For income above the personal allowance, if you live in England, Wales or Northern Ireland, there are 3 tax bands. In this video, we'll look at the tax rate for employment, self-employment, property and pensions income in each of these bands. There are separate tax rates and allowances which apply to investment income, such as savings and dividends, which we'll not cover now. The first tax band is the basic rate band. After deducting your personal allowance, the next £37,700 of income is taxed at 20%. After that, we move to the higher rate band. Income here is taxed at 40%. For most people who are entitled to a full personal allowance, they will only start to pay the 40% higher rate tax once their income exceeds £50,270. And they will only pay 40% tax on any income over that amount. The third additional rate band only applies to very high earners, whose income over roughly £125,000 is taxed at 45%. Let's illustrate all of this with an example. Sarah currently earns £45,000 when she gets offered a new job with a salary of £55,000. Sarah knows that this will make her a higher rate taxpayer because she'll be earning over the higher rate threshold of £50,270. And she's worried that her tax bill will increase significantly as a result. But what will actually happen? If Sarah accepts the job, the first part of her extra salary will still be taxed at 20%, as she has some unused basic rate band available. Once she has used up all of her basic rate band, any additional income above the higher rate threshold will be taxed at 40%. So accepting the promotion does mean that Sarah is now paying 40% tax, but only on some of her increased salary, not all of it. The rates we have looked at apply to the 25-26 tax year. The government reviews both rates and thresholds each year, and they can change. However, more and more people have been dragged into higher rates of tax because the higher rate threshold has been kept the same for a number of years. We are expecting it to stay at its current level of just over £50,000 until at least April 2028. If you are a Scottish taxpayer, then the position is more complex, as Scotland has 6 tax bands instead of 3 like the rest of the UK. A Scottish taxpayer will start to pay a higher rate of 42% once they earn over £43,663. Although Scottish rates are much more complex, the same principles apply as elsewhere in the UK. You can find more details on Scottish income tax in the links below. As your income increases, you might start to pay higher rates of tax, but only on the amount of income which falls into the next tax band. Rest assured that becoming a higher rate taxpayer does not mean paying 40% tax on all of your income.